Hi, everyone. Welcome back. Next, we have DevvStream Corp. It trades on the NASDAQ under the symbol DEVS and is a carbon management company focused on the development, investment, and sale of environmental assets worldwide, including carbon credits and renewable energy certificates. Happy to welcome its CEO, Sunny Trin, and Chairman, Carl Stanton. Welcome, gentlemen, to the conference today. Happy to have you.
Thank you.
Thank you.
All right, the floor is yours. Call me back when you're ready for questions.
Okay, thank you. Hi, everybody. I'm Carl Stanton, Executive Chairman of DevvStream, and I'm here with CEO Sunny Trin. We're really excited to be here with you today at the Emerging Growth Conference to discuss our company and its most significant milestone. As we recently announced, DevvStream has entered into a definitive agreement for a business combination with Southern Energy Renewables. This transaction represents a structural transformation for DevvStream. With the finalization of this deal, we are evolving from an environmental asset management firm into a diversified industrial clean fuels platform by combining DevvStream's financial and carbon market expertise with Southern's large-scale infrastructure capabilities. Our goal is very clear: to build a US-based, vertically integrated company capable of producing sustainable aviation fuel and green methanol at scale while monetizing the environmental attributes to drive down cost. We believe this is occurring at a moment when demand is accelerating, global mandates are tightening, and capital is finally moving into the sector. I'll now pass it on to Sunny Trin.
Great. Thank you, Carl. Before we proceed, I'd like to draw your attention to our safe harbor statement. Today's presentation contains forward-looking statements within the meaning of the Securities Act of 1933 and the Exchange Act. These include statements regarding the timing and structure of the proposed merger, expected benefits, and our future capital requirements. These statements are based on current plans and estimates, which are subject to risks and uncertainties. Actual results may differ materially due to factors such as regulatory approvals, market acceptance, and our ability to secure necessary financing. We undertake no obligation to update these statements except as required by law. Please refer to our SEC filings, specifically our Form 10-K and the upcoming Form S-4, for a complete discussion of these risks. This discussion is being provided in the context of our annual general meeting and does not replace or modify the disclosures that will be made in the Form S-4. So 2025, year in review. 2025 was about readiness. We operated asset light, advanced our environmental asset capabilities, strengthened public company controls, and positioned DevvStream for a much bigger strategy. Over the past year, DevvStream completed its NASDAQ listing, reduced its cost structure following the de-SPAC, and shifted decisively from transaction-driven activity to execution. DevvStream was initially created to focus on the voluntary carbon market. However, we must address the macro reality. Despite the long-term promise forecasted by McKinsey and other experts, the market had declined from 2022 through 2024. We began to see early signs of stabilization and selective recovery in certain segments of the market during 2025. According to Climate Focus Report, retirements were up 7% year over year for the first half of 2025, along with a healthier supply-demand balance. In addition, quality and integrity have become the primary driver for pricing and demand, with buyers prioritizing credits with stronger evidence, permanence, and verification. In response, we evolved. We focus on high-quality credits with known demand. This includes CORSIA credits, where airlines with international flights are being mandated to reduce or offset their emissions with these types of credits. In addition, we have broadened our scope by adding IRECs, or International Renewable Energy Certificates, to our portfolio. IRECs have continued to show strong growth trends, supported by expanding corporate demand. According to iTrack, the main IREC registry, the first 7 months of 2025 saw a 12% increase over the same period in 2024. This positioning leverages environmental assets that are seeing a growth in demand, offering the potential to provide immediate revenue to clients while materially reducing overall project costs. We entered into a non-binding memorandum of understanding with FIAFI to explore potential project-level financing opportunities. Discussions are ongoing, however, and there can be no assurance that an agreement will be completed. Simultaneously, we executed on an enhanced crypto treasury strategy. This strategy is intended to support balance sheet flexibility and digital infrastructure initiatives, including potential future applications in tokenization of real-world assets. Real-world asset tokenization has been growing dramatically in the financial world. We believe it will be a welcome addition to the environmental asset realm, bringing needed liquidity and transparency. And we intend to utilize our digital infrastructure to lead that convergence. At the same time, this has the potential to bring us significant recurring revenue. Now I'll pass it on to Carl.
Thanks, Sonny. Well, this slide is the core message of today's presentation. DevvStream brings the environmental asset origination, digital infrastructure, and a flexible capital structure. Southern brings industrial scale clean fuels development, including a biomass to fuel pathway targeting carbon and negative sustainable aviation fuel, or SAF. That's what we'll be referring to it today. Access to domestic feedstock and a potential Louisiana anchored flagship project. So why combine these companies? Really, it's because we believe that the biggest barrier to SAF adoption today is not awareness, it's economics. Alternative fuels remain more expensive than fossil fuels, and that cost burden slows adoption. Our combined platform is designed to reduce that barrier by pairing the fuels pathway with environmental asset capabilities that can lower the effective cost for customers. Now, I want to separate two things clearly. First, the policy and demand backdrop is real. It's not a DevvStream claim. It's a third-party regulation. Aviation and maritime are facing tightening mandates globally, and customers are being pushed to adopt low-carbon fuels. Second, our claim is that this platform is designed to create a more financeable, scalable approach anchored in Louisiana, where environmental assets and fuels will work together rather than separately. For investors, we believe this reframes DevvStream from a micro-cap services profile to a financeable industrial fuels and credits platform with long-duration revenue potential. Let's get specific on disclosed transaction terms. Upon closing, Southern equity holders are expected to own approximately 70% of the combined company, and DevvStream shareholders will own approximately 30%. A critical signal of confidence here is capital commitment. On December 3rd last year, Southern shareholders completed a $2 million PIPE investment into DevvStream at a significant premium to the market price. And Southern committed to invest significantly pre-closing capital to launch front-end engineering for its first commercial plant in Louisiana. Southern also secured a $402 million bond allocation from the Louisiana Community Development Authority to support its flagship biomass to fuel facility. While this is subject to final approvals and conditions, it provides a significant potential component of the project's capital structure. Closing of this business combination is currently expected to occur in the first half of 2026, subject to customary closing conditions, including shareholder approvals, regulatory approval, and the effectiveness of a Form S-4 registration statement. Now, from an investor perspective, here's why this matters. This is not a cosmetic transaction. It's a structural move to create an integrated clean fuels platform that can be financed and scaled, serving the massive global aviation and maritime shipping markets. And it's designed to give DevvStream shareholders meaningful participation in a larger and more diversified platform.
The anchor of this transaction is the proposed Louisiana project. Southern is currently developing a flagship biomass to fuel facility in Louisiana. This location was not chosen at random. We believe it offers a high concentration of biomass feedstock, existing strong logistics infrastructure, and an experienced industrial workforce. Most importantly, as Carl mentioned, the project has received a $402 million bond allocation from the Louisiana Community Development Authority. While this is subject to approvals and conditions, it provides a strong indication of the project's future capital stack. This facility is designed to convert wood waste biomass into green methanol and carbon negative SAF. Southern is currently in advanced discussions with technology partners to de-risk this development. This is a commercial scale opportunity intended to generate industrial multi-year revenue streams.
Thanks, Sonny. So here's why we are diversifying into renewable fuels now. Southern is targeting two specific sectors, aviation and maritime. Now, both are considered structurally hard to abate industries. In other words, due to the physics of how they operate with long distances and heavy payloads, electrification is not a viable option in the near term. Liquid fuels are necessary. Yet each of these sectors accounts for an estimated 2 to 3% of global greenhouse gas emissions, creating an immense pressure to decarbonize. Just to look at the scale, aviation is massive. In 2025, airport throughput reached 9.8 billion, representing roughly 5.1 billion individual passengers. To meet net zero goals by 2050, the industry needs to replace over 100 billion gallons of fossil jet fuel, with 125 billion gallons of SAF. Maritime, similarly, is the backbone of the global economy, moving 12.5 billion tons of cargo, or 90% of all global trade. It currently burns through 300 million tons of heavy fuel oil annually, per DNV. Both sectors are forecasting growth for the foreseeable future, too. And one potential strategic advantage, Southern's planned Louisiana plant is designed to produce fuels for both markets. Southern's technology can produce green methanol to sell immediately to shippers, or it can further process it into SAF for airlines. This capability has the potential to provide Southern with critical diversification in end markets and to allow us to pivot production based on demand and pricing dynamics. This is a case study on sustainable aviation fuel. SAF is critical, and here's the cost reality. I'd like to focus specifically on it since it's been topical lately. As you can see on the left, air transportation is notoriously hard to decarbonize. Here's the economic reality. SAF trades at a substantial premium to fossil jet fuel today, and that premium reflects high feedstock costs and limited supply. Also, since fuel represents over 25% of a typical airline's cost structure, there's very little room for extra cost. This is the dilemma that threatens slow adoption. Most current SAF is made from fats, oils, and greases, known as HEFA. While effective, this feedstock competes with food ingredients and risks creating inflationary pressure for consumers. Southern is pursuing a different path: wood waste biomass. It is abundant, especially in the Louisiana geography. It doesn't compete with food, and it is cost advantaged. When this low cost feedstock is combined with carbon sequestration and Southern's technology, which has the potential to generate substantial tax credits, the company unlocks significant value. But together, we can go further still by adding environmental assets to the mix. And this is where the inherent integration matters. This combination intends to create a platform where environmental asset origination and monetization can support customer economics. And this platform may serve as an additional lever to enhance cost efficiency, creating a pathway that may be difficult for many existing competitors to match. The strategic goal is clear: to pursue a structure designed to be cost competitive over time as incentives evolve. Again, not as a guarantee, but as a design advantage. And I'd note that the universal adoption of SAF is key for the industry trade group, IATA. On the chart to the right, you can see a recent projection. And even in the low adoption scenarios, the expected long-term growth is extreme. Oops. Sorry about that. Global mandates. One important point on demand. This is increasingly being driven by regulation and not discretion. We're tracking SAF policy developments across roughly 38 countries. As a reference point, both the UK and the EU put formal blending mandates in place at the start of 2025, beginning at 2% of total demand. Those requirements step up materially over time, towards 22% in the UK by 2040, and as high as 70% in the EU by 2050. We're seeing similar conversations underway in a number of other jurisdictions. Now, this is a very different from the US framework today, which is still largely voluntary and incentive-based. In many international markets, SAF adoption is moving into a compliance regime rather than relying on corporate choice. The reason this slide is here is simple: global policy is tightening. That creates a structural demand tailwind for lower carbon aviation fuels broadly. It is not a guarantee of revenue, and it's not a statement about any one pathway or project, however. We believe platforms that can scale, supply, and manage the effective cost to the end user would be better positioned to win.
So where does the rubber meet the road? Well, Louisiana. Southern is a US-based developer anchored by a proposed flagship biomass to fuel project in Louisiana. And why Louisiana? Well, 4 reasons. Number 1, feedstock. It offers concentrated wood waste biomass supply. Number 2, logistics. It has a strong existing road, pipeline, and waterway infrastructure. Number 3, workforce. It has an experienced industrial labor pool. And 4th, leadership. Strong pro-business state leadership focused on job creation and development. This project has experienced significant support at the state level so far, specifically that $402 million LCDA bond allocation that I previously mentioned. Southern has the location, the feedstock strategy, and the identified capital pathway. We plan to continue speaking about that precisely as the process advances.
So this is the vision. This combination is intended to result in a carbon negative fuels development platform with embedded environmental asset value. Our strategy is to lower the effective cost of SAF globally through a differentiated US platform-based program that can help speed alternative fuel adoption with 2 engines, clean fuels and environmental assets, and one direction, long-term scalable growth aligned with global mandates.
So, yep, thank you. So recent developments, right? I mentioned earlier about our FIAF MOU. We recently announced that we did sign a new and are now executed a definitive term sheet where they are targeting a committed of $100 million by the end of 2027. This will be used to fund high impact projects along with supporting early commercial alignment around our clean fuel strategy and their related environmental attributes. From an investor perspective, the importance of this development is not just the counterparty itself, but what it signals. Third-party validation of our strategy, growing market engagement at a commercial level, and increased confidence that our projects are aligning with real demand. In addition, looking forward, we are also evaluating nuclear energy as an enabler for next-generation fuels and energy-intensive infrastructure. Nuclear power provides carbon-free baseload energy, a key input for eSAF or electro-sustainable aviation fuel, eSAF production, hydrogen, and future AI-driven industrial demand. This reflects our broader philosophy, stay technology agnostic, but economics driven. Now, Anna, we'll be happy to take some questions.
Perfect. Thank you, gentlemen. Okay. So talk a little bit about why is SAF becoming such a critical solution for the aviation industry's emissions targets and regulatory compliance?
It's a great question. The airline industry is governed by a group called IATA, International Air Transport Association. Years ago, they adopted a framework to decarbonize the industry. The reason is because aviation is viewed to contribute 2 to 3% of total greenhouse gas emissions. And because fuel is central to the providing of air travel, they really don't have any other way to do it. There have been talks about long-term ability to reduce the use of fuels, but given the nature of the industry and the nature of the airframe development, that is beyond the scope of what I can see today. So what they've done is they developed a process to take existing oils and turn them into jet fuel what they call drop-in fuels. In other words, they can be blended with existing Jet A fuel with no other changes to the engine structure and be burned as regular fuel. So it became an obvious source for IATA to suggest and hold their members accountable. Countries around the world have begun to adopt that framework to either provide incentives, as we have in the US, or around other countries, including countries in the EU and the UK, to provide a mandatory framework. If the airlines or the suppliers to the airlines don't comply, there are taxes and other penalties approached to them. That's how important they're taking it. So it's a mandate in most of the world. In the U.S., it's more of a strong suggestion, and we expect that all of the industrialized world will eventually move to a mandated market for sustainable aviation fuels. So that's the reason why. The challenge is that there's not enough facilities up and running. These facilities are not inexpensive, and the development cycle is quite long. So the process for Southern is to develop a next stage type of fuel. It uses woody biomass as opposed to fats and oils. That provides a significant feedstock cost advantage. So combined with DevStream's environmental assets ability, we believe that we'll be able to provide lower cost fuels to the traveling public. And this is really critical. If the goal is to help the world decarbonize and to help airlines serve their passengers with a decarbonized product, the world has to get to where it has a lower cost product to do so. So that's really the entire story of why this makes sense in the DevStream framework.
And so, with that said, how does this strategy unlock valuation upside beyond what the street historically associated with DevStream?
Well, another great question. DevStream was created as a carbon assets manager and evolved into an environmental assets platform. This is really done because the voluntary carbon market effectively plateaued 2 years ago. That had nothing to do with what DevStream was doing. It just had to do with the broader market and acceptance of voluntary credits. So DevStream has continued to change itself to adopt its strategy to what fit its overall mandate, which was to help decarbonize industry. Now, if you were to think about the smaller landscape of carbon credits and compare it to transportation fuels, you can just imagine the scope of difference there. We still very much believe in the future of carbon credits and then also IREX and related environmental assets. It's a little more difficult to determine the timing and the trajectory of those assets. Renewable fuels, however, has a much more reliable projected timetable simply because of the mandates I mentioned before. So for our investors, we're exposing them to the upside and the tailwinds that are inherent in those markets. But we're also continuing to pursue the environmental asset platforms that DevStream was built on and had as its core. So we think investors will get the benefit of what we've been doing anyways, but now be exposed to significantly more upside.
Perfect.
One thing I'll add to that as well too, and thank you, Carl, is that Carl mentioned IATA before and the requirements of SAF being implemented. In addition, in order to reduce the carbon footprint of airlines, they're also requiring international airlines reduce the footprint by buying specific type of core oil credits that I mentioned earlier, CORSIA credits. So we'll be able to generate and offer those along with the SAF and be one of the first few companies to have a full solution to offer those airlines as well too. So here's something that's going to be mandated that we'll have a complete solution for.
Perfect. Thank you for that. Let's talk about crypto and tokenization. How does that fit in with this revised strategy?
Yeah, so crypto staking we're used as a treasury optimization tool, not necessarily a core business line. So it allows us to earn yield on certain digital assets while maintaining liquidity and security. Importantly, it is managed conservatively and does not detract from our focus on core clean energy and environmental asset execution. But we are also moving towards a tokenization strategy of real world assets, which I previously mentioned earlier. And environmental assets such as carbon credits is perfect for that. There's been a lot of issues about transparency, lack of data, and so forth. By creating the tokenization, it increases the liquidity along with providing solutions for those issues.
And what role do partnerships play in scaling DevStream's strategy, and what makes DevStream an attractive partner?
Well, there's two different groups of partners. The first group are the partners that Sunny mentioned, our partnership with Fayafi Investment Holding in Dubai. our partnerships with that we're exploring with IP3. We recently announced another partnership with XCF Global, which is another SAF producer, to explore joint market development while the plant in Louisiana is being built. So those are just examples of, and good examples to maybe express what we think is so unique about DevvStream. First is we are very technology focused. We're looking at other ways that we can decarbonize or assist in the decarbonization of industry. FIOPI is a great example of our ability to attract capital and to attract partners who have a similar vision and would like to hasten their pace of investment with the help of our technology and our management team. And then finally, the partners that we've developed in the crypto and the blockchain space are an important element. If you could think about the whole goal, if we can, as we bring capital, as we bring technology, as we bring tokenization to the world, the entire goal is to reduce costs so that industry can hasten its movement towards decarbonized fuels and decarbonized platforms. It's all meant to help bring down costs to make the process easier. Southern similarly has a number of technology partners. They are embarking on a large-scale industrial project. They haven't announced yet their partnerships, but I think you'll be able to see in the not too distant future that they've got a world-class group of people that are meant to help de-risk that program so that we can show investors the ability for them to actually bring this plant to fruition.
Perfect. I want to combine two questions for you both and let you kind of close with this. Talk a little bit about the SAF market and how it's maturing over the coming years and how DevvStream fits in. And with that, what milestones should investors watch to better understand this progress over the near term?
Well, that's a great question. It started with the IATA framework with an intention to bring total SAF demand or production, of 50% of the total use by the industry by 2050. So 50%, just to put that into perspective. Last year, the amount of fuel produced in the US was directionally 100 million gallons or so. In order to achieve the 10% goal, the interim goal of 2030, that number would have to be closer to 2 billion. So there's a multiple impact of, there's a multiple amount of volume that has to be produced in the industry. And it's going to have to come through plants like Southern. It's going to have to come through new assets that are retasked or new assets that are put in the ground or old assets that are retasked with this in mind. So we think this is a significant tailwind that is easy for investors to look up themselves and understand. And of course, because it's global in nature, you'll see that it's not just any one country that's being impacted. It's a global phenomenon. So our intent is to take this platform, to spread it along with its tie-in with our technology, and help spread it around the world.
Perfect. Well, thank you, Carl. Sunny, thank you so much for joining us on the conference. We appreciate you being here and the important work you're doing. We certainly hope to follow along with your journey in 2026.
Thank you.
Great. Thank you very much.
All right, everyone. We'll be right back with our next presenter.